This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. This is primarily due to news that there is a peace accord in Ukraine. So that was the dominant influence supporting stock indices. Also, we did have news that the Swedish central bank cut interest rates further, so that being a secondary factor, probably much less a secondary factor than the Ukraine news. Some of the gains given back, though, with the U.S. economic reports at 7:30, for the most part coming in weaker than expected. Retail sales showed a larger than expected decline. Jobless claims showed a larger than expected increase. And yet futures are holding up, I'd have to say, very well. In fact, the decline that we did see off of the highs on the 7:30 reports now seems to be rather limited. So I would look for higher prices from here, very likely new highs for the day in the indices. Longer term, still looks like the main trend is higher for all of the major stock index futures. Over in the currencies, seeing the dollar index lower, this after the U.S. Treasury Secretary making comments that were a bit dollar unfriendly in a sense that he tended to reprimand some of the other countries that are on a course of debasing their currencies. So that's somewhat of a factor. We also had Bank of Japan officials indicating that there may not be a need for additional economic stimulus from the Bank of Japan. So the yen sharply higher on that news. We feel, however, that that is not the case, that the Bank of Japan ultimately will be forced to add more stimulus in spite of those comments from Bank of Japan officials this morning. Also, the pound gaining, this after the Bank of England indicating that inflation numbers will increase next year and in the following year, suggesting that there could be an earlier than expected rate increase from the Bank of England. Our feeling there is that in spite of these comments, the Bank of England will not be able to raise interest rates anytime soon. And the Australian dollar lower after unemployment numbers increasing more than anticipated. In fact, now unemployment in Australia at its highest level since 2002. So we continue to look for lower prices in the Australian dollar, and there are increasing probabilities that the Reserve Bank of Australia at their next policy meeting will be cutting interest rates again. And in the interest rate markets, pressure developing in the overnight trade, especially in the bonds, this after the Ukraine peace accord news. Since then, though, we have seen a recovery to higher on the day, and this primarily due to the weaker than expected U.S. economic numbers. So I think we're very close to a bottom in the 30 and the 10-year issues. I think once we do get an agreement between Greece and the European Union on a debt restructuring deal, I think that will be when the last of the flight to quality longs are liquidated. And I think that will be the timing to come in back on the long side of 30-year Treasury bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.